Hello there. I realized that this group, we're calling it Namibian Investor, and some of you may be wondering what is the difference between investing and saving. I've been a saver most of my life. Since I was a child, my general rule is that to save 10% of everything I earn. Used to put it into savings accounts, later I put it into unit trusts, but the older I've got, the more I realize that there are better investments with more rewards and with more interest. And we'll come back to that later, why interest is so important. I'm a great believer in reading. Couple of books. I've got a Kindle, fantastic thing. You just simply, at the press of a button, buy yourself a book and start reading it. But if you want to go to your local bookshop, I'm sure they would be able to get some of these titles for you. This is Gary Keller. It's called The Millionaire Real Estate Investor, and what he basically says is that it's important that the trick is to get started, and then you let the power of growth on growth take you higher. The trick is to get started. Many of you, I know, are looking at these presentations or logging in or seeing what I'm posting, but you don't actually do anything. Some of you have opened accounts with easy equities, but you haven't put any money in. Some of you have got money, but you haven't really bought any shares. The difficult thing is to get started, and the trick is to get started. And once you've done that, you just start growing. And again, with easy equities, it's so easy. It's $100, $200, $50. It's not a lot of money. It's not as if you have to have 10,000, 20,000 to get going. So the trick is to get started. The Nike advert says, just do it. Tony Robbins, wonderful book, Money, Master the Game, 7 Simple Steps to Financial Freedom. And he says when you lack confidence about money, it unconsciously affects your confidence in other areas as well. And when you take charge of your finances, it empowers you and excites you to take on other challenges. As soon as you've got that financial strength, that solidity, that financial freedom, and independence, it really empowers you to do other things as well. Ramit Sethi has written another very good book, I Will Teach You to Be Rich, a 6-week program that works. Most people don't need a financial advisor. No need to be spending fees on a financial advisor. He says you can do it all on your own and you can come out ahead. And that's the point of this group, Namibian Investor. Manage Your Money Like a Grown-Up, Sam Beck-Bessinger. This is a South African book, very good book, very hard-hitting, written, as you can see there, for a young audience. But she says, find yourself a nice, cheap, passive ETF fund and sleep better at night. Got to agree with that. I love ETFs. And the last book is by Taylor Larrymore, The Boglehead's Guide to the 3-Fund Portfolio. Some of you have been following my Simple Pension Fund on this group. It's basically based on this idea. He says by owning just 3 low-cost total market funds, that's a local equity fund, a bond fund, and an international equity ETF, investors have historically outperformed the vast majority of mutual funds, unit trusts, over time. He says 3 ETFs. And in our case, it would be a local JSE 1, JSE Top 40, Satrix Divi Plus, something like that, a bond ETF, and a total international equity, MSCI World, Core Shares Total World ETF. He says that will just do. Financial freedom, it's just 2 steps. It's so simple. If you have debt, you have to eliminate debt, unless you're buying an asset, such as a property. But in all other aspects of your life, get rid of that debt. You need to find ways to save money and, of course, save money every month and invest money every month. You need to find the cheapest investment platform you can, lowest costs. You can have a look around, compare them all, make sure you see all of the fees. You know what you're getting yourself in for. Personally, I'm with Easy Equities because the fees are so low. The fees are actually free. It doesn't cost you anything to open, doesn't cost you anything per month, and very low fees. And try to make automatic investments every month. If you earn $5,000 a month, try to put $500 into your investments. If you're earning $10,000 a month, try to put $1,000 into your investments. 2 examples. The power to illustrate why we're investing, the power of compound interest. Should I rent or should I buy a property? If you rent, let's say you're spending $8,000 a month, you're going to be renting, let's say, for the next 30 years, and in 30 years' time, 2062, your rent is now $80,000 a month, and you've given your landlord $11.8 million, and you have nothing. You've given your landlord $11.8 million, nearly $12 million, and you have nothing. I think that should say 2052, by the way, 2, 3, 4, 5, not 2062. You've given the landlord all that money, you own nothing. You buy a property, and look, there's no question, the property will cost you more than to rent. And you've got other things as well, like rates and taxes and maintenance, etc., blah, 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 blah. But the point is, after 10 years, you're now scoring, because remember, the rent goes up every year. Pretty much your bond repayment, I know it's going up at the moment, and one day it'll go down, but I mean, it pretty much stays the same. And in 20 years' time, you own the property. You live there for free for the rest of your life, except for the monthly rates and taxes, and the asset is yours, it's in your name, and of course it can be passed on to your children. What a wonderful start, a head start for them in life, whether they want to live in that house or to rent it out and live off the income. It's wonderful. So, property. And to finish off, the other form of investment is shares. Should I put my money into a savings account or into shares? NamPost, $600 a month over 30 years, you're going to have $745,000. Very nice. And you pat yourself on the back, you think you've nearly got $1 million. Well done. Don't forget, you've got to pay NamPost $13 every single month to invest, and their growth is about 2.5% a year, so it's not very much, but I'm assuming that that's okay for you. You've got your $745,000, that's fine. Here's the Namibian investor who's invested in an ETF. This one is an MSCI World ETF. It actually has given 18%, but I've been very conservative. I put here 15%. You get dividends, of course, with an ETF as well. So I put here 2% dividend. It's not much, but you're going to reinvest that. And just as in the previous example, you're going to increase your contribution every year. 9.6 million. 9.6 million. That's the end of the presentation. Please, as Nike says, just do it.